Jim Baird from RJO Futures, Monday, August 24th. All right, obviously some tremendous volatility overnight, continuing the stock market. Talk about notes and bonds, but you can't talk about notes and bonds without talking about the stock market. A big continuation last night of the weakness late last week in the stock indexes, and then just a crazy acceleration into the New York Open this morning with both NASDAQ and S&Ps locked at the trading halts. Made for a very disorderly cash market open. The ETFs went crazy to the downside. The NASDAQ actually went and took out the October Ebola lows of last year, and the S&P went right down there. Futures never got anywhere near these levels because of the trading halts. As the ETFs bounced, as the stocks bounced, and the futures came off the lows, there was a mad scramble the other way. The volatility very high in both directions. We basically rallied almost a historically great intraday rally in the S&Ps and the NAS up to resistance, up to where they were basically late Friday afternoon, and then another sell-off. All right, the bond market, as Rick Santelli said today at TV, the bond market is acting as the adult in the room. It basically has. It was much more subdued, much more orderly. We were up strongly, actually printed as high as 163, so we made new swing highs in the bonds for the last couple of months, but we fell off even before the S&Ps recovered a bit. Yields got down to that's a 10-year note. Yields got down to 262. Earlier last week they were at 290. That's a pretty big move. I think it was Wednesday morning, the long bond opened up 157, so a 163 handle was enough to discount this big plunge in stocks, and we have a very two-sided market right now in the notes and bonds that likely continues all week. And notes, we got down to 190.5. Now mid last week we were at 223. So the notes and bonds did a great job anticipating this debacle, in the stocks. I think they're going to handle it with some more cool. I mean, we're basically going to be two-sided. We're going to be looking for more economic news and see what the Fed does. But what the Fed does isn't that big a deal for the 30-year, or as big a deal as one might think. Anyways, reports to look out for: new home sales tomorrow, Case-Shiller home price index, and consumer confidence. All market movers. Durable goods Wednesday, PMI flash Wednesday, and Dudley, the Fed governor, speaks, who is always very dovish. Jobless claims, normal jobless claims, and GDP on Thursday. Friday, personal income and consumer sentiment. But we got to keep the eye on the stock market. The stock market is like an ongoing report here for notes and bonds. But again, I think we've rallied big enough, and yields have fallen over the last 4 or 5 weeks, anticipating this break in stocks, that even though we'll likely trade with enough bias, we're not going to scream higher. Look for two-sided trades going forward. I can reach at 800-500-2461 to discuss any futures market. Please give me a ring. Involves substantial risk and may not be suitable for all investors.